Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach trading at Trading University. Happy New Year, and as always, we need to remind you that trading involves risk of loss and is not suitable for all investors. Before we get to the charts, I just want to highlight our own particular philosophy here at Trading University. The pattern on the chart is a reflection of the market's underlying fundamentals. First market we'll take a look at is the Australian US dollar, and what we mean by that the pattern on the chart is a reflection of underlying fundamentals is when you see a pattern of lower high, lower high, lower low, lower low, that's indicating a bearish environment. That's telling us that the market has bearish underlying fundamentals, and that's definitely the case here also. This is a weekly chart. You can see nothing but downside here in the Aussie. We pop down to a daily chart, not much else to look at there. Our longer term objective here was 80 even. We think indeed you'll go below 80 even, and our RTT ratio, the level we're looking at overall, it would be down here just above 77 even. So we think that's where the Aussie's going to go. You know, we're not all that bared up on the Aussie the closer we get to that downside target. However, you know, with overwhelming dollar strength, yeah, the Aussie, you may start to find value down there, but timing is everything. You don't want to get in too early and just be stuck as it grinds lower still, or just goes flat on you. So we see value down here, but we think you're still a ways off from actually wanting to step up and start to accumulate it on a longer term. So we think there's still a bit more room on the Aussie. So continue to sell rallies short term. Next market, dollar Swiss. There's the dollar Swiss. Look, it reached our overall goal there, longer term goal of par. We've been saying 100 for a long time, and the dollar Swiss indeed got there. Dollar Swiss was good to us this week. We said towards the tail end of last year that we were going to keep track of the trades the method generates for us this year. Yesterday was pretty much your first full day back at trading, so we did keep track of that trade for you. Here it is on the spreadsheet. Day trade, we're just going to keep it very simple. Just going to trade two contracts and keep track of those two. We're going to put them on at the same time, take them off at the same time. It's just easier to keep track of it that way. Generally, we teach that you'd put two contracts on, take one off, and let one ride. For the sake of highlighting our trades here, we're going to keep it simple. So you can see this is Central Standard Time. So Central Standard Time, we put two on at 6:15 a.m. at 99.81. A little over 2 hours later, the method told us to exit two, and we got in there at par 01. So that was a total of 46, $400. So a good way to start off the new year, right, with a nice day trade, and that came here in the Swiss franc. And here I'll drop down to a 15-minute chart so you can see exactly how we pulled that off. It was right here actually. That's 6:15 a.m. right there. You can basically see that the market stabilized. We waited for the trend line break. You had a nice retracement in here. Boom, boom. See, low to high. Market held that level. Held 99.70, so boom, you got off a trade, and that was that trade we highlighted right here. And as the year goes on, we'll keep track of those trades for you, and you'll be able to see how our method does overall. So pretty good trade in the Swiss franc for us there. Next market, the dollar index, and boy, the dollar index just it broke through that resistance. It broke through the 09 high. It just continues to go. You know, if you want longer term perspective on this thing, just pop out to a monthly chart, and there you'll see, yeah, you've kind of got plenty of room there now. You're breaking out at the tail end of the year there. You broke out in December. You're rallying. You're trading above those levels in January. So yeah, that's a bona fide breakout for us. We continue to buy dips in there, and you know, just to give you an example, here's a back down in that short-term chart, and this is what we mean by buy dips. That you get the dips. Don't think that just because you're in a runaway rally that you won't get opportunities to buy it. There you go. That's what we look for here. The market, you have a rally, the market pulls back right into our zone there, and it starts to stabilize, and that's going to give you an opportunity to day trade that guy. And that's what we teach. We teach how to do it pretty much on all time frames. certainly we appreciate the longer time frames from an investment standpoint, and that's what we highlight generally in this format. But we certainly don't have a problem rolling up our sleeves and teaching people how to make money on those shortest of time frames on the day trades. And that's basically what I do at Trading University. We teach in live markets, and we show you how to do it on those short-term time frames. However, the same method's going to work long-term. Our methodology is based on fractal geometry, where what happens on the higher time frames reflected on the lower time frames. That's a two-way mechanism also. It works the same way. What happens on the lower time frames, same thing's going to happen on the higher time frames. Hey, back to the here and now. You got a runaway rally in the dollar index. We think there's plenty of more room on the upside there. Next market, Euro US dollar. There's Euro got to 120. We've been looking for that. We were saying we were looking for it at the tail end of last year. We're into a new year, of course. We were a little bit off. It got there the first day of the new year, so we look for a continuation of lower prices in the euro when you pop out to, well, when I scrunch this up, you could see that you have a lower low now to the 2012 low. And what do we say? That the pattern on the chart is a reflection of the fundamentals. This weekly chart, it's showing a clear pattern of lower highs, lower highs. Now you have a lower low, so we'll anticipate continued downside action there. And you know, that same trade we talked about, we showed you in the Swiss franc. You're going to have the same trade in the euro here, and it happened right in here, right just before the U.S. Open, London session, just ahead of the U.S. Open. The trade that I highlighted was right there. Here, I'll show it to you again. And here, where we're just looking for that retracement, and then you get that nice clean retracement into that zone. Then you come out of that zone, you take out a short-term trend line right there, and that's what we look for. And whew, those are pretty profitable, and they've been profitable throughout the last year. Certainly, we certainly see that continuing too. So, Viva the bull market in the dollar. Gold market, we track gold as we track any other market here. You can see that you found support back in early November, and that held up pretty good, and that just marked a counter trend move there, a counter trend rally in the gold. And here's gold a little bit longer term, and there's your monthly, and you can still see clear pattern of lower highs, lower lows. Let me pop down to a weekly. We continue to opt to sell rallies and recommend selling rallies. And here, really, gold, in order to reverse that pattern, you'd have to have a pretty big rally here. Kind of hoping you would get a little bit bigger rally to tee off on it, but nonetheless, clearly have a pattern of lower highs. So we're still in the sell the rally camp for sure in the gold market. Dollar yen, you know, it's just a runaway train there. Look, it continues to charge away on the upside. You know, I think what dollar yen is valuable for here, you can see the bottom of that big head, that massive head and shoulders rally. We wrote about that back at the time when that happened, and we talked about that sea change move. And sure enough, what dollar yen serves, it serves its purpose here is it's highlighting what the dollar can do, what a currency can do when you have everything aligned for it, when you have everything. When you have your central banker cheerleading a weaker currency, and you have across the ocean, you have a U.S. economy which picking up, and kind of sounds a little bit like the euro, right? And that's what I'm getting at. To me, the dollar strength against the yen is a harbinger of what it can do against the euro in 2015. So there you go. Thank you so much. We'll leave you with this thought, because it is so powerful that once that realization hits you, you could just focus on trading. You could focus on what the markets are telling you. You're not going to let everything you read and see complicate things. It's really going to simplify your trading, because you could just focus on that all-important pattern. Thank you so much. My name is Jay Norris. I teach trading at Trading University. Thank you, eSignal, and we'll see you back here next week.